All right. Hello, everybody. It's about 2 o'clock. We are getting set and getting ready to walk you through dynamic allocations with Bob Blake. See everyone here, right? Okay, just had to check to make sure that I am being heard loud and clear. And I just got the thumbs up saying we are good to go. So again, welcome everybody. We are super excited to have everyone join us. This will be recorded for everyone to have a recording of this afterwards. And so that if you wanted to look at the other information that you learned, it's all there waiting and ready for you. So let's get started. Okay. So again, good afternoon, everyone. We are again really happy to see such a full house. We are really excited that so many folks took the time out of your day to join us. So just a couple of house cleaning comments. Similar to our interactive customer support webinar, I just want to start with some opening remarks, take a few minutes to, at a high level, review some of the highlights of the module that we are focused on today, which is dynamic allocations. Next, I will hand the controls over to Bob Blake, who will further elaborate and walk us through the use of the module. With enough time to spare, we will be taking questions, and then after the webinar, all attendees will receive a link to the recording as well as the slide deck. So let's begin. So dynamic allocations represent a significant milestone in Sage Intacct's move towards the continuous close. With this new module, allocations are now 100% automated, saving organizations up to 3 days of time each month. Now what that means is that time can be better spent on activities that deliver more value for the organization. This includes oversight, analysis, and strategic advice. Like most organizations, you allocate indirect costs or revenue to gain a more accurate picture or performance, or excuse me, a more accurate picture of performance for your departments, products, projects, funds, or other critical dimensions of your organization. And if you're one of the more sophisticated organizations, your allocations likely involve a complex allocation model built into a spreadsheet, multiple allocation steps, annoying adjustments, and complicated reporting, when all you want is a before and after view of indirect costs and revenue. Now, is that so much to ask? So over the last few releases, Sage Intacct has been quietly releasing new indirect costs and revenue allocation capabilities. Awesome. So let's get you all up to speed on some of the benefits that are moving, to Sage Intacct's dynamic allocation module. First and foremost, eliminate manual gathering of source data. Now that's pretty cool. You can also ditch the complex spreadsheet calculations, alleviate the headache of post-period adjustments, and not only that, go completely hands-free. Now what does that mean? Dynamic allocations can be set up as a recurrent or scheduled allocation. That means that you do not need to lift a finger to run your allocations once it's been initially set up. You can also automate billing on indirect costs. New transaction rules allow you to automate project-based calculations for posting to the general ledger and flag transactions for automatic invoicing. Currently, Sage Intacct is the only mid-market solution to offer this capability. Excuse me. I'm getting notes that the audio is kind of jumbled. Let me check in. So can you hear me? Is everything sounding clear?
Chris, you sound okay. You're breaking up a little bit. So are you on a headset?
I am on a headset.
Okay, that's better. If you can pull it a little closer, then I think you'll be okay.
Okay. Thank you. My apologies, everyone. So where was I? Oh, streamline audits and troubleshooting with transparent allocations. Using the same allocation definition and sequencing means that your allocations are done consistently every time. Allocation logs allow you to track success or failure and make the necessary corrections, resulting in more consistency and fewer errors. And then finally, simplifying your reports and analysis. You can use dynamic allocations in conjunction with Sage Intacct's already amazing reporting tool for a very graphical view of before and after allocations have been made. All right, so let's move along. So we hope you're really excited. I'm going to hand the virtual mic over to Bob Blake, who will walk us through the module. Thank you so much, everyone, and take it away, Bob.
All right, thanks, Chris. Hope everybody's having a great day so far, and good to see a lot of folks that I've worked with in the past online today, and I look forward to meeting the rest of you at some point. So let's start. I'm not going to do too much of a PowerPoint here. If you have any questions, you can submit those in the questions box on the control panel, and we'll enter those at the end of the webinar. And I see we've got chats already going, so either of those two places will work. The recording and slides will be emailed to you afterwards. That's a really fuzzy picture of me, and you can read this when you get the slides if you're interested. I've worked with nonprofits for a long time. I'm going to do a couple slides here to go over why allocations is a good idea for anyone. So dynamic allocations, the data is there in your system, so let's use it and gather that data automatically to create the allocation for you. And I'll show you a couple ways that we'll handle that with several allocation examples here. So we can get rid of spreadsheets that you are using currently. So you have the ability to specify your source accounts, what dimensions you want to be involved in those allocations, how you want to split those allocations, whether that is among based on statistical data or data that's already in the system as actual. And you can group them to run together or run one after another. Sometimes an allocation is being done and then you need to allocate from that what data is available after that allocation has been finished. So you might need to group those and order those in a specific manner to be able to do your allocation there. All right. You can alleviate headaches of post-period adjustment. So a lot of times allocations get ran and then some transactions accidentally get posted into a prior period because the period wasn't closed, something along those lines, or you just don't have timesheet data available to do your allocation, so you take your best shot, and then we offer you the ability to do a true up of those adjustments. So we'll take a look at that as well today. All right. I think as Chris said, you can go completely hands-free. So you can set up an allocation on a schedule to recur. You could run it every night if you wanted to. And the only thing you really have to do is monitor them and make sure that they're running. You'll actually get an email letting you know that if they did run and if there was an error message. So that's one way to monitor them. And then you may need to update them as grants run through the end of their cycle or new employees are added or employees change. Whatever the basis of your allocation is, you might need to make some changes. But here, this slide represents in general what we're doing with allocation is we have a source. That source then needs to be broken down based on some basis, whether that's headcount, salaries, FTEs, what have you, and then get broken into the specific target that gives us a true cost of performance. So what I'm going to do is I'm going to hop right into the meat. We'll skip the hop out of this PowerPoint here, and we'll jump into Intacct. So what I did prior to running some of the allocations that we're going to look at today is I brought in a payroll register. So I just imported payroll like you would from your payroll provider. And in my payroll, what I did is I coded some things directly to a project. So if I look, you'll notice that I coded some things to projects, 100, 110, et cetera. And then I have a cost pool called 998. And what I've done there is I've posted my taxes and my benefits to 998. So any bills that I got in during that month that I got for benefits, I would have coded to 998 for my project. Again, project is just the name of the internal class, you might call that grant or project or program. Also in my departments, I have a 999, which is where I keep my cost pools. So some of the data got entered into a cost pool. So specifically in this case, these are taxes and a benefit that I threw in there as well. Then I coded at the employee level. You'll notice I did not code everything to the employee level. I only put my salaries in at employee level. If your source system can do all of the allocation and pull in the benefits and the taxes at the employee level, that's awesome. Let them handle the work. If in my case, the system didn't do that, then what I did is I just brought in the rest of the values into a pool. And we'll see how that works in a moment for using it in allocations. Then I created a second import. And in this case, what I did is I loaded in the number of hours that someone worked during that time period and what department, project, entity, and which employee it was that I'm recording hours for. So I just recorded 80 hours for each employee that was here, and I split those up randomly. There's no, I didn't do anything except make the numbers up. So they don't correlate in any way back to the values that are over here in this one. It's just to demonstrate that there are multiple ways that we can do an allocation. So now if I come over here into Intacct, the allocations are set up here under account allocation definitions, and then there's groups. The transaction allocations that are down there, that comes with core product functionality that allows you to use that allocation code during transaction entry time. So if you know how you want to allocate something going at the onset, then you can easily do that. So here, what I've done is I created an allocation for my payroll for my taxes and benefits based on dollars. So if I look at this one, and we'll take a look at most of these today, is I've given it the rationale. So I've put in the description of what it's for. I put in my methodology. I'm using payroll actual data that I imported, tagged by employee, and I'm allocating the amounts in payroll tax and benefits based on an amount and actual payroll wages. I could grab an attachment and bring that on there. So if I've got, an attachment, I always like to do this because sometimes folks that are either newer to the system or don't know this, you can copy, drag an attachment in, and that attaches there. So anyway, my little thing that I think is cool. Dimension treatment. So when we're looking at an allocation, we don't always take all of the dimensions into consideration. It may not make sense that we're going to do anything with my allocation based on a customer or an item. And so I would just tag them as not being considered as part of the focus for that. So what I do here is for my entity, I'm telling it to focus on that. So it's going to use the dollars from the entity, the grant, the department, and the employee. It's not going to look at the site. And for restriction, I'm telling it to preserve the values. So what that's going to do is anywhere that there was a value in the restriction dimension, it is going to preserve that value. So if I had someone split up 3 different ways between 3 different restrictions, it's going to follow it that same way, okay? Now I need to tell it where is the data at that I want to allocate out. So that's what's in my source pool. So my source pool in this case is the taxes, or are the taxes and benefits that I told in the spreadsheet and I imported in. So to get to that data, I need to create an account group. Anyone that's used Intacct and worked with the report writer, the financial report writer, knows what an account group is, but anybody that doesn't, I'm just gonna view the one that I am using here. And all this is it's a group that I'm calling a cost pool that says use accounts. I can edit it real quick and it's a little easier to see that way and blow it up. Here, I told it I wanted accounts between 5124 and 5128. So those accounts then are the ones that are going to be part of my source. So it's just going to look at those accounts because I've grouped them together. One thing that it does not do that it does during a report but does not do during allocations is it does not look at any of the filters that's on this account group. We're only looking at the accounts here because we define what the filters are downstairs here. And we'll get to that in a moment. So in this case, everything's in a cost pool and we want that cost pool to be 0 when we run our reports at the end of the month. So I'm telling it to allocate 100% out. You may have use cases where you're not actually taking and emptying 100% out of a specific group. This is in my accrual book. If I want, I could select an alternate book. So if I were doing cash or had, I take that back, not cash, any user-defined books, then you can move those over and those can be part of your allocation. So you don't have to allocate based on actual. You could allocate based on something that you have in another book. And if you do choose, you can exclude your regular or accrual set of books and only use what you chose in the alternate. In this case, I'm going to use my accrual books that are there. The source pool time period, so this is current month. If I made this current year, this is where I could actually do some true ups. So in this case, I'm just having it not do any true ups and it's in the current month. I could though have an activity delta post. So if it goes back and I'm doing this for current year to date or fiscal year to date, then it could go look at that data and anything that changed between running it this time and last time will get captured and put there. Or a third alternative is to auto reverse the prior posting. So it'll reverse that prior posting, whatever had been done, boom, and create a new one for this year. So depending on how you like to see things displayed and reported may be the reason to choose one of these two. Or if you know that you have payroll that's constantly where you're getting the timesheets a month later for whatever reason, then you have the ability to true it up as well. So my filters here on my source, what this does is it allows me to tell it where that source data is for these accounts. So I'm telling it, I'm looking at my shared program and I'm looking at my cost pool for payroll, taxes, and benefits. You can filter on any of these, and of course they would have groups in here as well. So if I were to look besides the specific values, I also have groups. So those might be grouped by a custom field that you have on an object. Maybe you have grants and each grant has some custom fields on it and you group that way. You can run it this way or filter that way by choosing that group in the filter. So now we have our source defined. Now we have to choose a basis. So my basis in this case is coming from my relative financial data. I could have it as statistical, and we'll look at statistical in a minute. And this is, where is it coming? What do I want to use as my basis? I want to use salaries. So I created an account group for salaries and the accumulation. Do I want to look at the activity that happened or the ending balance? So do I want to look at what the activity was in that month, or do I want to look at what my ending balance was that month for the allocation? And that can vary depending on what your methodology is. Again, I can choose different books. Here, I can tell it drop negative basis lines from consideration. So if there's anything that's negative, then a negative balance, a credit balance in this case, then it would not become part of the allocation. All right. Again, what's your time period? Your basis and your source do not have to have the same time period. You may use your basis as the fiscal year to kind of true things up as well if you wanted to. They don't have to be in the same spot. You may filter, I didn't in this case, but you may filter by different dimensions for the accounts that are in the salaries group as part of your basis. So if you needed to, you only wanted to have a specific restriction, you could. Target. So this is where at the end, where do we want this data to get housed at? Well, what we do is today, the way that it works is I'm posting my allocations. I probably would never post to commitments, but I have an IDC analysis set of books and I have an allocation set of books. And what I do is you create this new set of books and you create journals in those books and you post into those journals. So I created a journal, or I created a book called Allocations, a journal called AM Tax Benny. So allocation management, taxes and benefits, that's what's going to be allocated there. I created a separate one just to keep things all in one place. They could all go to one journal called Allocation. Then we determine where do we want to have the transaction post to. So I chose this to go to allocated payroll taxes and benefits. And then I could override dimensions here. So if I know that my source dimensions are going to be something and they are, what you'll notice is customer, vendor, item, and site are the ones that are here. That's because those were the ones that were not considered in the allocation. So the allocation is automatically going to use the ones where they're in focus or where I'm preserving the values. If I'm not considering them in my allocation, then in my target entry, I can say, I want these to all go to a specific site if I wanted to, or not. I could have it just ignore that. We'll look at an example where we're actually going to use that in a minute. If you are using, this is super cool, if you're using grant costing and billing or project costing and billing, and your allocation needs to be tagged as billable. So, you know, as you're doing a normal AP entry or journal entries or any type of AR, or I'm sorry, AP purchasing, that's the word I was looking for. As you do those, you know, you can tag things as being billable and then run a bill at the month end by project or grant. So if you want these to get added in and marked as billable, then you check that box off. My reversing for the source pool, so when it reverses the dollars out of the source, where do we want those dollars to go? Where do we want them to get moved to? What account number? So you can specifically choose an account, or you can say just reverse it from the account it was in. So in this case, I chose to use the source account. All right. So I'm just going to cancel this one, and let's go see how we would run one of these. All right. So in General Ledger, I have generate allocation. So this is me going in and setting it, just going and running it manually, so to speak. Put in my dates. So I'm telling it 8/31, and I'm telling it, giving it an individual one that I want to run. So I'm going to run PR tax benefit. All right. So this is going to create that journal entry for me. I could do a group of them in a moment. I'm going to show you that. You can also schedule these to run so that they're running for you. So for example, while that's running, these do run in the background. So it does get in a queue and it runs out on the servers, and it will send an email back telling you that it was successful or if there was an issue with it. While that's running, I'll hop in here to account allocation groups, and you'll notice that I don't have any. But if I wanted to, I could add one, and I could say this is my payroll and benefit, and PR Benny, and I'm going to tell it to stop if a group member in the sequence fails, because what may be happening here is that I want to run this payroll one, and then I want to run this payroll one after it, but this one needs to be ran and be complete before this one happens. So I would tell it to stop. It may be that these two are totally unrelated and it doesn't matter. You could have it just continue that way. So I can set up groups of these, and then when I run them over here, generate allocation, that's where I could tell it, give me the group, and I could run those in a group. Okay, so then it runs 2 of them at a time. All right, I'm not going to generate those. I'm actually going to come over here and refresh and hope for pass. So it passed. So now I can view this entry. In my email, it actually has a link and I can click on it. It opens up a new tab and shows me exactly where that journal entry happened. So here, what we'll notice is that we have $959.29. It got moved around, and it got moved to allocated payroll and benefits, or I'm sorry, I can't even read. Allocated payroll taxes and benefits, and it got credited out of its original account of 5127 and 5128. And that was all just from the cost pool. So this broke it down by employee and by grant and restriction where they were at. If I didn't want this in there with the employee tagged, I could have told it not to maintain that, and it still would have created the entry for me this way. Here's what's really cool is I see this journal entry and I think, well, where in the world did this come from? I know it came from allocations. When I click on this, it opens up a snapshot of this and shows me when it was ran, who initiated it, and it shows me what my source pools were. And here I can look at my source pool calculation. What was the calculation that it came up with for this? This always opens up or downloads into Excel, because that's where you would typically want to work with it at, probably. So this opens up and tells me here is the source was, that's that 959.29 that we saw in the journal entry. I go back, I can see my basis. The basis downloads in Excel as well. And here it will show me that here were the salaries and the salaries by employee. So it's showing me what looks like the journal entry that I imported, right? Then, now this one just opens up to a screen. So it shows me what was that split? How was that done? So here, this is showing me that 17.3.5, these were the percentages for the data that was in the basis, and that's how it spread those back to the target for us. All right, so we get all the details that we need that made up all of those numbers. All right, so let's take a look at a report here real quick, because probably a question some of you might have is, you know, we're not everybody may be used to transacting in multiple books. So I want to show you how that works in reporting. So I've just come up with a little report here, and my columns, just to show you, I'm looking at my IDC set of books and my allocation set of books, and then the total of all of them together. So when I'm doing this report and creating it, I'm telling it in here what reporting book to use. I'm telling it not to use accrual, use IDC, use my allocation book. So now when I look at this and I run a report, it shows me here was my actuals, here's my $959 that was allocated, and then here's my remaining balance here. All right, so what I might do is add to this report, add another line down here to show the debit side of this where that hit. So it was in allocated payroll, right? So I can see all of these. Now I don't see my other set of books because there was all zero and I've told it to suppress columns with all zero. But what this should represent, or what it does represent, is that we always know where we were at before any given allocation was done. We always can see the allocation separately, and we can see it all together in one. So you don't lose what your starting point was ever, because it is set up in another set of books. All right. Hope that makes sense. All right, so what I want to do is take a look at a couple other use cases, because there are, besides payroll, we have, the ability to use allocations to help us do some other things too. So another popular one is to, if you don't bring in by dollars, then you might use an allocation where you're looking at hours that were worked and allocating payroll taxes or maybe even salaries by hours. So some clients may, in this spreadsheet, just bring in everything and nothing is tagged to employee. Everything is just tagged, and all payroll and benefits all end up going into a cost pool, which then is allocated out based on their hours. So in this case, the only thing that really changes here, because I'm still looking at payroll, taxes, and benefits, the only thing that really changed is going to be I just saw a chat that says we lost audio. Did we? Can someone confirm that they can hear me?
Bob, I can still hear you.
Okay. All right. Thanks. All righty. Where was I? The only thing that changed here was my basis. So I told it to look up timesheet hours instead, and I told it to look at a statistical account. So I'm looking at the statistics, the hours, which are on this spreadsheet. So the number of hours that went into each employee, and then it will break down the payroll expenses the same way as the hours were done. So in here, I would have, again, putting that to an alternate set of books, and actually, yeah, that's fine. And I'm putting it to allocated payroll again. All right, so that's another example that we have. Then we have indirect cost. So indirect cost is one that sometimes you'll need to have multiple allocations for. And there's a couple reasons. One might be that you have different indirect cost rates depending on which grants you're spreading those across or what programs, et cetera. So in that case, we would create an indirect cost allocation for, not for each grant, you'd create it and create a group of grants where you might tag have a custom field that's indirect cost rate on it, and then you'll group those together and use that indirect cost rate in your allocation. So as a grant gets created, you set it up with the indirect cost rate that it has on it, that record, and it automatically goes into your allocation pool to get an indirect cost for you. All right, so, and that's true for any dimension. So you can do that for any of the dimensions that you might need to group together. But usually it's a grant that you need it for indirect cost. So here, again, I'm using the same entities that are in focus pretty much. Again, I may not use, here I did include restriction, but not employee. Then I'm telling it the percentage to allocate. So when you think of indirect cost, it's not an amount that you're moving from somewhere to somewhere else, right? You're actually generating a debit and a credit of the same amount, and it's not taking away from anything. So this would be your indirect cost rate. So if it's 10%, then you would place that there. Then I have an account group, and that's just an account group I created that I believe probably has all GL accounts in it. That's a second reason that you might need multiple allocations, is that you may have indirect cost that you have for one grant that has allowable indirect costs that has different, and there may be different allowable costs on another grant. So therefore, we'd have to have two different account groups that we would be looking at to create that indirect cost. All right, so when you have different indirect cost rates or different allowable costs by grant. Those are two use cases where you need more than one allocation. But as we saw, we can easily group them all together and they can run at the same time. Again, everything else is the same as it was before. The basis and the source, though, you'll notice they are what? The same. And that is because we're just taking 10% of that and adding that into a journal entry. So I'm putting that into an IDC set of books and an IDC journal. So I'm telling it just to hit IDC offset in one and to hit IDC applied in another. Again, everybody, you know, we have a bunch of them in here that we can choose from just for IDC alone as examples, because there are folks that have a de minimis amount and those who are offsetting using actual cost. So depending on what that is, you might have multiple accounts there. And that might be another reason you have another allocation too. Again, you can tag these as billable. So if you're generating an invoice to your funder, your grantor, you want to probably include your indirect costs as being ones that get tagged as billable and show up on that bill for you, okay? So that's indirect cost. This mileage pool, that one, actually, you'll notice that was from a while ago. I actually created that as a specific use case where a client wanted to put in all their money into a mileage pool, and then they were going to use headcount to split that out. So, and I think well, we were doing some testing and doing it by one employee, but you could set that up to go by all employees and have it allocate out your mileage in that case. It could be the same for telephone or office supplies or anything like that. One that something that folks ask us about a lot is how do we automate the release of restriction? And part of it depends on how you are tracking restrictions within Intacct. And if you're using a methodology in which you are, this is how this will work with this release from restriction allocation, is if you are using tagging your revenues as restricted as you get an award. So a new grant comes in for $3 million, you're going to tag that as revenue with a restriction tag of temporarily restricted, or in today's world, just restricted, right? So we would tag that. Then as we are spending that money, then what we would do is we would tag those as unrestricted. So all expenses then being tagged as unrestricted, usually what one would do is at the end of the month or end of the quarter or year, or they let their auditor handle it, they would do a journal entry to release that restriction, and that amount would be on a reimbursable basis, the same as what you were reimbursed, right? So what we've done in this allocation for releases of restrictions is we have told it to look at our entity, our program, our grant, and not to look at anything else. We tell it to look at a group of releases. So in this, I would have all of my expense accounts, or all of them that pertain to items that need to be released from restriction. And what I would do is tell it to allocate 100% of those expenses. And I'm going to do the same thing. I'm going to use the same basis again because I just want 100% of the same thing. And what I'm going to do here in my target entry is I'm going to hit satisfaction of restrictions and contributions. And on my satisfaction of restrictions, I'm going to tag it this way. I'm telling it not to look at what the data is, because everything is unrestricted on expenses, but on revenue, on these accounts, we want to actually tell the restriction to flip over and be temporarily restricted, and on this side, we want it to be unrestricted, okay? That way, we can get a report of a report that shows us that the amount that we have left in temporarily or restricted dollars. So this could be run every month, and it could also be run on a recurring basis. So if I go here to recurring allocations, I can add this in, and what I can tell it is I want revenue releases, and I want this to start, well, heck, why not just start it today? And tell it to never end and repeat daily. So every day, this is going to run. So this will run and do my releases from restriction and allocation on a daily basis. I can tell that to do that for either an individual or for a group. So if I wanted to do that, then I could. And I could tell it to allocate through period end if I were running it. Doesn't really make much sense daily. Well, maybe it does. If you've put dated stuff into the future, then it would pick those up. So then I could save that and it would schedule to run. All right, so I'm just going to go run a couple more of these allocations and take a look at the report so we see how that looks for us, and then we'll open it up to questions and answers. So I'm going to do my release from restriction now. And then I'm going to run my IDC. All right, so those are still in the queue. So let's just preview that report and we should see some differences there in a moment. So let's check our queue and see if those have passed. They're still there. Of course, when you're doing it and you don't have an audience, then they seem to move to pass really quickly. All right, so that one's passed. This one's still in the queue. All right, so now if we go run this report again, we should have some different data here. Let's go see what that one actually did. So my indirect cost, I'm only looking at expenses in this report. So of course my revenue would not show up. Okay. All right, my indirect cost happened. So both of those would have hit the revenue side, so there would be no change here. So we have the same report as before. Let's just drill back down into one of these here to show you what it did with my indirect cost. All right, so I do see I do have history here to show when this was created. I didn't mention that before. So here we see that our IDC got posted and it calculated 10% of all of the expenses that were in this source pool. So here we go. So if I add that up, that should be the total amount that got allocated times 10%. And my target. So here we're seeing the percentages as they should go to there. All right. Let's open it up to question and answer if anybody has any questions. Were there any questions in the Q&A yet?
It doesn't look like it. Oh, here we go. Looks like we have Janelle, who has said hi. Hi, Janelle.
We thought for sure we'd have a lot of questions. That's why we left some time.
We'll hang out for a minute and let people formulate some questions. If not, there's many opportunities moving forward to either reach out to myself, which, by the way, I realized I didn't introduce myself earlier on. So just so there's no confusion, there's not two Bobs on this call. My name is Chris Radicone. I am the client account manager for the Intacct clients here at J&T. Okay, so it looks like we have some questions. Let's get Janelle in first because she said hi so very nicely. All right, so this is Janelle. Can you show example of combining two different groups with different percentage allocations for IDC?
Yeah, so quickly what I would do is I would create under reports, I would create a dimension group for grants. So if I look at the ones that I have here, I have some groups already done. So I'll say projects. So if I had these two, so this would have things that are set up as two different groups of projects or grants here. So then what I would do is in general, in my allocation, what I'd do is I'd take the IDC that I have already and I would duplicate it. And I might say that this is IDC 12.35 and change this to 12.35 as my IDC rate that's different. And what I would do is my source, rather than being all grants, I would tell it that I want to use this one called temp restricted purpose grants. And they're getting a 12.35% one IDC. So I'd save that. And then what I would do is I'd just run this one when I need to and run this one. Or come over here and, not over there, create an allocation group for IDC and just say this is IDC and say run all IDC. And I'd run this one and that one, or add those to my groups, and then I would generate allocations or set up the recurring allocation on that. So I'd create a group under reports. This is where I always go now when I look for dimensions. Reports, setup, all your dimensions are right here, whether they're user-defined, program, or project, or standard. Create a dimension group for them, and then duplicate and change that. Did that make sense? Yeah, someone asked if you have multiple allocations, if you can upload, or do you set them up one by one? I would duplicate them. I haven't looked at the import template for allocations, but seeing how the screen is set up, it's kind of like the one for transaction definitions, that it might just be easier to set it up. But once you've got one type, you can duplicate them. But since there are so many fields, I imagine, I haven't even really checked, I imagine that there is, let's see, GL. Yep, account allocation definitions are there and the account groups too. So you could download those templates.
Awesome. Thank you so much, Bob. That was for Lamon's question, correct? Because I'm going to switch over here to Diane. Gabriel asks, so when you create a group of expenses, can you allocate based on FTE Wait, hold on. FT and the department at the same time. And then she writes, I meant allocate based on file grant and department at the same time. Apologize for the typos. No worries. Happens all the time.
No worries. No worries on typos. Anybody that's seen me type knows. Okay. So you want to allocate at the same time. So meaning that you would, in your definition, if I'm looking at this, so this one's by hours, so that could be FTEs that you're uploading as a statistic instead of hours worked, actual hours worked, then it might be FTEs. So you would be allocating to whichever of the dimensions that you have in focus. So it will look at that and it will allocate to those same dimensions with either the same value, or if you flip values down here, you could change them. And then when that entry is made, if we were looking at the general ledger that happened, the journal entry that happens as a result, if I look at, and they're actually not there, they are user-defined journal entries, right? So if I take a look at that, what you'll notice is that those dimensions are all filled in. So department, entity, employee, the ones that I told it to fill in, it did. Now, sometimes you have to do an allocation prior to doing the next allocation in order to have the data there. So if you have, you're trying to allocate salaries based on something, and then the benefit based on the result of that something, then you'd have to run one allocation and then run the second one. But again, they could be run in a group because they do go in order. So I hope that answered your question.
Excellent. Thank you, Bob. I got a message here from Lavin. He wants to know, how much does dynamic allocation cost? That's the big elephant in the room. Just like everything else with Intacct, it's all subscription based. So it's all prorated to your renewal. So if anybody does want to know what the cost is for dynamic allocations, please reach out to me after the webinar, or over the next couple of days. I'll be sure to put those calculations together for you so you have an accurate idea of how much it will cost you. Yeah, just so whoever wants to know what it would cost them, just send me an email afterwards, and we will be sure to put that together for you. All right. Are there any other questions? Oh, Dan Gabriel follows up. So you can create your own new dimensions, correct?
So you would need to create your own, you would need to create the dimension ahead of time. So you would need to create, if you have a new site, you'd have to enter in a new site, or you had a new department or program, you'd have to enter those in, and then those would be available during allocation. Allocation won't create a new dimension for you. One thing to note too is you want to make sure that your allocations don't violate your dimension relationships. So a lot of people have dimension relationships that certain departments only belong with certain grants or programs. And so you want to make sure that, that would be a potential error that you would get, is if you violated a dimension combination or relationship, I'm sorry.
Excellent. Thank you, Bob. All right, it's about 2:54. We still have plenty of time for questions. So if you have something that you want to ask, please feel free to do so. It looks like we got another one. Oh, nope, just Diana saying thank you. I'm sorry, Diane. We'll hang out for a few more as people come up with possibly other questions. So All right. Oh, looks like we got another. All right. Can you please go over restriction release?
Yeah, so the way that I have it set up in this environment is, let me hop into Excel. It usually helps a little bit. Helps me a little bit. So if I had debit and a credit, so when I get revenue comes in, I'm going to debit cash or AR, and then I'm going to credit revenue, and then I'm also going to tag it as restricted. Okay. So revenue in, or just even promise, right? Then as I spend, I'm going to debit expense, and I'm going to credit AP, cash, what have you. That is going to be tagged as unrestricted. All right, so revenue is always tagged as restricted. Expense, I don't know what I wrote there. See, I just proved my poor typing skills. All right, so unrestricted. So if I look at it this way, I have unrestricted and restricted. I have revenue, I have expense. So as time comes along, goes along, I've gotten in this restricted money of $100,000. Then as I spend this money, I'm spending 5,000 of it. Those are tagged to unrestricted in the system. Then what the allocation will do is it will go and it will find all the transactions that are here, and then it will create a release. And then some people will add that back into revenue on the unrestricted side as 5,000. And then over here, I'm going to get minus 5,000. So if I were looking at statement of financial position, I would see that I still have 95,000 here in unrestricted, and here that's 0 because I've got that minus that. All right. So it would preclude that you are using a dimension for your restrictions for this particular one to work. And then the actual allocation really just goes out. It looks for all expenses in my case in that account group. I'm looking for everything that was tagged as unrestricted, which should be everything technically, but you know, if you type like I do, or you set a business rule or a smart rule to not allow you to use anything but that, you tell it to go look at the same group, and you tell it here, when you post to satisfaction of restrictions and to contributions, whatever accounts you use for that entry normally, and all I want you to do is flip the restriction. So you're going to give me restriction 2 on that line and the restriction 3 on that. So basically, in a nutshell, it's going out there and it's looking at the $5,000 and it's creating this entry, the release and revenue in this column, so that we know where we're at.
All right. Thank you, everybody, for these great questions. We have just 2 minutes left, so we're pretty much wrapping up. I'll wait for another minute for last-second questions, but it looks like we're about done. So I really want to thank. We have one more question. Let's say that we are. Excuse me. Let's say that we are allocating a staff person and we know the allocations will change. On your release allocation, if you do not have restricted revenue, will the allocation skip that account? Can you set up a new one in advance? Bob, do you think we have enough time to cover that, or should that be an email follow-up?
That should probably be an email follow-up.
Okay. All right.
Yeah.
Well, that's totally fine. Yeah, we are at the top of the hour here, which is great. That took the entire hour, which is fantastic. We hope everyone on today's webinar learned a lot. If you have any questions that you want to follow up with, please feel free to reach out to myself. Again, my name is Chris Radicone. I am not Bob Blake. Again, sorry for not introducing myself at the onset of this. But again, we are incredibly excited that everyone was able to join us, and everyone who was on today's webinar will receive both the slides as well as this recorded deck as well. So again, thank you so much for everyone who took the time to join us today. We really am happy that that we were able to do this for you. We're going to try to do these more often. So keep an eye out in your email for an invite from myself for any future events like this, or you could also check out jmtconsulting.com. Yeah, I think that'll wrap it up. So once again, thank you so much for everyone for coming. Bob, thank you. Melissa, Zoom meeting worked amazing. So again, this was great. Really enjoyed it.
Thanks, everybody.
Thanks so much. Have a great rest of your day. And again, if anybody needs anything from either of us, please feel free to reach out via email or give us a call. Thank you so much. Have a great day, everyone.